What's going on, everybody? David Figueroa over here, back at InvestQ. Happy to have you guys on. Now, again, we're going to be talking about something that happened last Wednesday, as Redwire did report their Q2 earnings August 5th after the market closed. And there were some pretty good things that we saw in the report. So if we go over here and we look at the Q2 2026 highlights for the quarter, you're going to see here that revenue came in at approximately $117.1 million, representing nearly 90% year-over-year growth, while gross margins also are at 27.8%, and backlog did climb to a staggering number of $542.1 million, and quarterly bookings were approximately $165.8 million, giving Redwire a 1.42 times book-to-bill ratio, as we do see here. And this definitely was not a perfect quarter, even though there are good signs and there are good things in this quarterly report. That's not the whole story. Again, on this channel, we always like to look at bull case, bear case, positive, negatives. We do our best to be as unbiased and unattached from our emotions when it comes to our investing strategy and the way that I present the content on my channel. And real quick, speaking about the content on my channel, we are edging closer to the 1,000 subscriber goal. So please feel free to hit the like and subscribe button if you do enjoy the content that I provide. Now, anyways, in this video, what I want to do is break down what it is that I liked, what still concerned me, and what it is I'm going to be watching next. And as always, none of this is financial advice. I'm simply sharing my own research and opinions. So starting off with the biggest headline we have here, which is regarding the revenue growth, 90% year over year at $117.1 million. And when you compare that to the last year's Q2 for Redwire, their revenue back then was $61.8 million. So one important context that you have to have when we're looking at the number is we shouldn't look at nearly 90% growth and just assume that Redwire's existing businesses organically grew by that amount. The Edge Autonomy acquisition has dramatically expanded Redwire's their defense technology business. And during this quarter, approximately $55.2 million of revenue came from space, while approximately 61.9% came from defense tech. Now, when you compare that with Q2 of last year in 2025, when space generated approximately $56.7 million and defense tech generated only $5.1 million. So space revenue is actually slightly lower year over year, and the massive difference in this quarter's revenue came from defense tech. And I do think that's important because Redwire today is becoming much more than just simply a space infrastructure company. It's increasingly turning into a combined space and defense technology company. And one of the numbers that impressed me the most was regarding gross margin. And Redwire, they also reported that gross margin was at 27.8%. Comparing that to last year's gross margin during the same quarter was roughly negative 30.9%. So gross profit was approximately $19.1 million to positive gross profit of roughly $32.5 million. And that right there does show massive improvement for the company. However, the overall company is still not profitable at the moment because Redwire reported a net loss of approximately $41 million, and adjusted EBITDA was approximately negative $3.2 million, and free cash flow during the quarter was approximately negative $35.3 million. So the story right now is basically that the company is getting much bigger, gross profitability has improved substantially, but Redwire still has work to do when it comes to operating profitability and cash generation. And R&D expenses were also approximately $12.5 million. And for a company operating across spacecraft, autonomous systems, sensors, defense technology, and microgravity research, significant R&D spending isn't something that should surprise you that much. But eventually, with any investments that you put any hard-earned capital to, that any business is going to put their hard-earned capital to, it needs to translate into something in the lines of contracts, revenue, and more cash flow. And Another thing that's very strong for the business that we saw in this quarterly report was regarding their balance sheet, because the company ended Q2 with approximately $607.8 million of total liquidity. That included $557.8 million in cash, cash equivalents, and restricted cash, along with approximately $50 million in available borrowing capacity. So for when you compare that side by side, liquidity 1 year was only around $113.6 million. And Redwire also says that total debt declined approximately 75% year over year. Net interest expense fell below $1 million. Series A preferred shares were eliminated and warrants outstanding declined approximately 92%. So financially, this company enters the second half of 2026 with substantially more flexibility. As we do know in other videos that we have covered, even though that debt is something that can be useful, and some people kind of feel like it's a red flag when all debt is eliminated, but reducing your debt in general is a good thing, especially if their expenses aren't just focused on day-to-day operations and they can focus more on expanding the business. So that's always a good thing for a company to have more flexibility, in my opinion. And management says that the capital could be used toward maintaining balance sheet strength, internal innovation, and potentially accretive acquisitions. Now, obviously, it's one thing when you just have capital, but deploying it effectively is what really matters and what really makes a company stand out and become successful in the long run. And again, the highlight that you see on your screen right here regarding the backlog, backlog is at $542.1 million, and Redwire reported approximately $165.8 million in quarterly bookings. Again, as I mentioned, that's a book-to-bill ratio of 1.42 times. 1.42 times book-to-bill ratio. And over the trailing 12 months, bookings reached approximately $647 million with a book-to-bill ratio of 1.52 times. And contracted backlog, as I said, this record backlog right now is at $542.1 million, a staggering number. And that does show that over the quarters and over the years, you have seen backlog continue to climb from roughly $291 million in Q1 of 2025 to the number that we have today of $542.1 million. Now, that is encouraging because a book-to-bill ratio above 1 generally means that Redwire is booking new business faster than it's recognizing its revenue. But the usual caveat applies in the sense that backlog is not revenue. We've talked about this numerous times in all of the videos. Those contracts, they still have to be executed and converted into actual financial results. Again, we've covered this in many videos. Feel free to check out previous videos with CTM and Big Bear AI specifically, where we talk more about that. And going back a little bit to defense tech, and defense tech generated approximately $61.9 million in revenue during the quarter and around $145.1 million in new contract awards. That resulted in a quarterly defense tech book-to-bill ratio of approximately 2.35 times. Space, on the other hand, generated around $55.2 million in revenue, but only approximately $20.6 million in quarterly bookings. So defense tech is clearly becoming an extremely important growth engine. And one example was a high 8-figure multi-year contract to deliver Penguin Mk3 unmanned aircraft systems to an undisclosed NATO country. And Redwire also delivered nearly 200 Octopus ISR payloads year to date and introduced 2 additional Octopus products. And this is why I personally think that investors, they need to stop thinking about Redwire purely as a space stock. Quick reminder before we continue, if you're enjoying the content and want to connect with the community, check out the first link below for the free InvestQ community. And if you want access to advanced stock research and tools, the second link is a Prophecy 7-day trial for just $7. And last, if you want daily market updates and behind the scenes content, follow me on Instagram using the third link in the description. Now, let's get back to the video. And I do think that the people that have been paying attention to Redwire, have it on their watch list, or are shareholders of the company, I do think that they understand that it's not just a space stock, and they've expanded substantially into autonomous aircraft, sensors and defense technology also being a part of what it is that Redwire is a part of. And they're now central pieces of the investment thesis for those that are long-term holders of Redwire. Now, that doesn't mean that the space side isn't interesting, because Redwire was recently selected as one of 15 vendors under the Space Systems Command approximately $980 million Night Star IDQ. And an important reminder that Redwire, they did not receive a $980 million contract. It was selected as one of several companies eligible to compete for future work under that contract vehicle. And Redwire also continues working on its ROSA rollout solar array technology, and two ROSA wings are expected to generate approximately 60 kilowatts of power for NASA's Lunar Gateway power and propulsion elements. So Redwire still has exposure to national security space, spacecraft infrastructure, and potential future lunar development. And one of the more interesting long-term developments involved Redwire's recent subsidiary. It's another article that came out on August 6th, and it's regarding SpaceMD. And SpaceMD, they did sign a contract for an entire SpaceX Starfall spacecraft for a mission currently planned for 2028. And as we see here, the spacecraft, when you read through the article, you see that it could carry as many as 32 pharmaceutical in-space laboratory systems, or PIL boxes. The idea is to conduct pharmaceutical research in microgravity and then return those experiments to Earth for analysis. And Redwire isn't starting completely from scratch here. That's not the case. Again, since November 2023, the company says 54 PIL box systems have already flown to the International Space Station, and 45 unique compounds have been successfully crystallized. And these include compounds related to areas like cancer, cardiovascular disease, obesity, and diabetes. And I personally view this as a long-term optionality rather than something that materially changes Redwire's 2026 financial performance. But if commercial demand for microgravity pharmaceutical research continues to grow, it could eventually become another interesting revenue opportunity. And looking at the rest of the year, Redwire, they did reaffirm that its 2026 revenue outlook for approximately $450 million to $500 million. Again, that midpoint would be around $475 million, so it was reaffirmed. And after generating approximately $214 million during the first 6 months of the year, Redwire still has a significant amount of execution required during the second half. But that being said, having more than $542 million in contracted backlog and a trailing 12-month book-to-bill ratio above 1.5 times provides some meaningful visibility for the company. And where I personally stand after reading this quarterly report is I think this was a very strong growth quarter, but I wouldn't call it a perfect quarter. The positives are very clear when it comes to the revenue year-over-year growth of 90%, how gross margins have also dramatically improved, how gross profit turned positive, and backlog has record highs at the number of $542.1 million. And again, bookings remain strong, as we've talked about numerous times in the video, and the balance sheet continues to look better, and it looks significantly better than it has in the past. And don't forget that defense tech has become a major part of the business, but the risks on the other side of the coin also are clear as well, because Redwire still lost approximately $41 million, and adjusted EBITDA remained negative, and free cash flow was approximately negative $35 million. And a large portion of the year-over-year growth came from the Edge Autonomy acquisition rather than organic growth across the entire company. So when we go into the second half of 2026, there are really four things that I'm personally going to be watching. And that is, can Redwire deliver on its $450 million to $500 million revenue guidance? Can that record backlog continue converting into meaningful revenue? Can adjusted EBITDA and free cash flow move toward positive territory? And can management successfully integrate and grow the defense tech business? Because at this point, I don't think that the biggest question is whether Redwire can get bigger, because clearly we see that it can. The bigger question to be asked is whether or not all of this scale eventually turns into sustainable profitability and positive cash flow. And that is probably going to be one of the biggest things I'll be watching over the next several quarters. And again, if you do enjoy the content, feel free to hit the like and subscribe button. Let's get to that first milestone of 1,000 subscribers, as all of you guys, every single one of my subscribers in my eyes are valuable, from the first one to the 1,000th one to the 10,000 to the 100,000th to the million. I view all of you guys as valuable members of my community. And speaking about my community, feel free to check out the links below. First link would be to the free InvestQ community right here, currently at 72 members. And again, Will Rich has also added some new communities as well with the Prophecy AIR, which is also included with Prophecy. And if you want access to that, go into my community or try the second link in the description below for the $7 7-day trial. So with all that being said, guys, InvestQ out, stay safe, comment below what you want to see in future upcoming videos, and I'll see you on the next video.